Hey, founders. Got a question the other day about cross-border considerations or non-U.S. buyers of U.S. companies when doing M&A transactions. Now, look, we're not lawyers, but we can tell you that when it comes to looking at outside interest from a foreign buyer, there's a few things to consider. You know, the sort of the ins and outs or some of the nuances of merger and acquisition buyout world is different depending on where the capital's coming from and how they think about transactions. So, big private equity firms are global. And so they're going to, kind of on their side from a legal perspective, already think about it before they issue a letter of intent. But, if it's say a foreign strategic buyer and they're thinking about buying your company, there's a couple of things that might come up, like CFIUS review. That's a governmental kind of regulatory thing that makes sure that if a foreign buyer is buying U.S. intellectual property, that governmental agencies, kind of review and approve that. So it's different than HSR or Scott-Rodino, depending on this any competitive or a move to make sure that a transaction isn't taking competition out of the market. But that could also come up, when a foreign buyer is coming into play. So not necessarily as big a deal as say CFIUS. The other thing too is that, it's good to clarify any points from a foreign buyer about, whether they can take ownership of your entity. Like an S corp, if the foreign buyer doesn't intend to kind of change it or wants to own the S corp, it's unlikely that they would do that. They would probably create a new holding company that's a C corp or something else. But, they wouldn't be able to. There might be some nuances around an LLC. There are certain corporate forms in the United States foreign owners cannot own unless they do certain things or take certain steps, to kind of change the corporate form or create new corporate forms. So it's not quite as simple as saying, well, if you've got a European buyer, you need to do the conversion from euro to US dollars. It's a little bit different than that. And there are, again, around intellectual property, around legal structure, and some of the nuances of doing M&A deals, you want to be heads up about this. So if your investment banker hasn't done a cross-border transaction before, that's probably okay, as long as you've got a good M&A attorney involved in the process who has done or who has partners who have done cross-border transactions. This is not one where you want to use inexperienced players, or you definitely need to have at least one really experienced player involved if you're going to do a cross-border transaction. And look, the best buyer for your business, depending on what it is, might be in Eastern Europe or in South America. So when it comes to going to market, don't limit yourself to only U.S. buyers. On the other hand, if you do have a non-U.S. buyer, be aware of some of these things. All right, thanks for coming by.